Guys, good morning. Welcome to Monday, the Monday the 19th, and this first of these Monday morning Zooms. So hopefully you'll get something out of it. We're going to talk about protection space today, and my name's Neil, I'm the sales director here at Prime. I've been here since 1st September now, so it's hopefully see a few of you at the kickoffs over the next few weeks if I've not seen you before. And it is an absolute pleasure because I've known Charlotte for several years now, and Charlotte's from Aviva, and we're going to have a little bit of a conversation about protection today. I say I've known Charlotte for a few years now, but do you want to just give a bit of background, Charlotte, on what's your name, where do you come from?
Yeah.
You've done?
What's my name? Where do I come from? Well, yeah, thanks, Neil. Thanks for the invite and good to see everyone this morning. It is like a bit of a blast from the past with me because Neil, we worked together, 10 years ago? Neil was actually my boss. Neil was my boss back in the day. So yeah, I was actually part of the Personal Touch family for many years. Left there, joined, been in the industry around 18 years, so it's probably shown both our ages now, Neil. Very much distribution. So now I don't know if I've left the dark side or come to the dark side. So I'm now in provider world and joined Aviva almost a year ago. And yeah, it's been a steep learning curve. You think you know a provider, right? And you think you know what they do and how they work and how they operate. But until you actually come in and poke your head around the front door and see the vast size and scale of a business like Aviva, and just how much is going on, it's a bit of an eye opener. So I probably understand your world more than my own world at the minute, Neil.
It is quite interesting moving with distribution, isn't it, into corporate? And
yes.
I imagine the number of PowerPoint presentations you have to do in terms of.
Yeah, we love a PowerPoint, bit of governance, corporate red tape. Yeah, we love it.
So what does a normal day look like for you then in your space?
As with all our worlds, and I suppose within financial services, it can differ quite a lot. But for me, I was very keen on coming into this business and keeping that distributor hat on. I think sometimes in a business of this size and scale, you can have individuals there that are driving proposition changes, looking at pricing, looking at customer outcomes, and sometimes they don't actually work. You know, like I see Richard Will and the guys from All Together, who I know really well, sitting there doing what Richard and Helen do day in, day out. They don't do that, and they've never done that. So for me, it was really important to keep that hat on, and just to give them that understanding of the challenges, but also, the positives of being a financial advisor. And I think that's really helping to shape how we then support our intermediary partners, networks, all that sort of stuff, which is good. So day to day, it can vary. There's a lot around governance, regulation at the moment. I think, I know we're going to probably come upon that at the moment, in a moment, but around the market study and what that's going to do to the industry. So Aviva being a market leader, we're inputting a lot to the regulator around, what it is to be an intermediary, why it is so important, all of that sort of, all of that info, and trying to shape and drive that outcome from the regulator, which will be an interesting one. A lot of it's around how we can continue to enhance and develop proposition. As I say, there's no point our proposition team sitting in a dark room around what clients or advisors need. So really keen on making sure distribution have input and feedback. And my team are responsible for our kind of key strategic relationships, i.e. Primus, etc., and how we can work with like yourselves, Neil. And the good thing about Aviva, we work with across distribution. We've got a very large distribution footprint, which is really good because I'm quite nosy and I like to know what's going on anyway. But you get to have a real feel of what's happening out there in the market and how we can bring that back in. Which I think is useful. And it is just navigating a very big business. There's always a lot going on. And to be fair to Aviva, there's a lot of positive. There's always, what can we do to make the advisor journey easier? What can we do to make protection more attractive to consumers? How can we educate consumers? Which is great. Sometimes I think we don't share or shout about it enough. And that's what I've noticed since I've come in. I think it's Aviva. Everyone knows what Aviva does. Well, no, like you say, Richard's not going to go, do you know what, this morning I'm going to go onto Aviva's website and have a look at what they're doing. We need to be able to help share that insight because we have got so much here. And that's one of the things I'm really keen on driving, as well as
it was quite exciting a few years ago, wasn't it, when Aviva sort of headed out into the... They were advertising life insurance with the old Paul White House. Do you remember the advert?
Oh, God, yeah.
He was sat on the stairs and they all went on holiday and
oh, yeah,
go because that was a a ghost, and we life
Ghost.
insurance
Yeah.
going to talk to you intermediate. I think that sort of we all
Yeah.
got very excited there were going to be lots of advertising on TV about go to your local broker and
Yeah.
get insurance. But
We still
yeah,
do, and to be fair, when you start looking at our kind of marketing focus and budget for this year, we spend an awful lot on that kind of direct to consumer advertising. So we've still got the Aviva adverts, albeit it's probably not as kind of prominent as that Paul Whitehouse one. But we did one, I think it was towards the end of the summer, the Heart Radio campaign. So we spent, as you can imagine, a small fortune on that, but it's around kind of why protection and the circle around you that kind of support you, and it was all sponsored by Aviva, and that got a really, really good take up. Not that it was come to Aviva, but it was just why you should be looking at,
yeah,
what you need to support you and your family, etc. And it was always a push then to say speak to your financial advisor. So we've got some good take up on that. So it'll be interesting to see what we decide to do this year. But that's always at the top of our
excellent.
plans.
I must admit, I do listen to Heart 70s sometimes when I feel like a little bit of a disco session. I didn't necessarily hear the Aviva stuff.
I'm not judging.
You and I over the years have talked a lot about sales process, haven't we? And objection handling, all that stuff.
Yeah.
Is there one sales idea process that you have come across that you think, that just takes the biscuit? That's a successful route to take on protection.
Yeah. They're all different and unique and very special in their own ways. And you can see the ones that have got, the sales process nailed down. They're all kind, it's something that the whole business work towards and fully embrace. For me, I think a sales process needs to be bespoke to each individual business and how they work, how they run, and how they operate. The one thing I'd say that is core to that whole sales process is a really strong client engagement strategy, because you can have all the snazzy bells and whistles in regards to processes and automation, etc. But I do think our intermediary market is successful based on a really strong client engagement strategy, and that's evolving and that's changing over time, and something we at Aviva are always looking at, and how you engage with clients, because you've got different client demographics now that want to probably engage with you in different ways. So I think a strong business needs to have probably multiple different ways of client engagement and how they then work and support and be there for the clients, depending on what kind of demographic they fall in. Is it more online? Is it more face to face? Is it that regular engagement? I think is really important, and that's where working across distribution partners as I am now, that seems to be the theme that runs through, where you've got that nailed down and that client knows who you are and what you do for them, and they're there, you're there for them should anything happen. And from a referral perspective and just how you can kind of build that seems to be a theme of success from speaking to different distributors, and just being agile in how you can adapt and work to change, I think as well is a key one.
Mm-hmm. What's always interesting for me, I mean, I used to do this stuff back in the 80s and early 90s, and in those days before the advent of online payments, we used to do check delivery. So if someone did suffer a critical illness or a heart attack, or someone died in the family, we'd go to head office and we pick the check up, and we then deliver it to the house. And I think the thing that demonstrated for me was if you can see the passion for what you do. Because if you understand the benefit you bring, then it's very easy then to enthuse about it and feel that it's that important in the sales process. It's quite important at the start to say it is very important that we get this sorted out, as opposed to just leaving it hanging. And
that passion is the key one, Neil. You're spot on, because we do. Again, there's something we probably don't share about enough, but I'm sure some advisors are aware. We do a huge academy style training program at Aviva. It goes average webinar, you've got 2,000-3,000 advisors on there, and we do a whole journey from start to finish. And we do sales skills and overcoming objections and all that sort of stuff. And like you say, that's great and it's a great foundation, but unless you truly believe in it and you've got that passion and you want to then be able to support and just be there for your customers, you need that as well as everything else that I've just mentioned side by side, I think, to make it work.
Very good. So what have Aviva got in store for 2026 then? It's going to be an exciting year. Everyone says it's going to be an exciting year, don't they? We've got 1.8 million people in the UK that need a review with their mortgages here. So how are we going alongside with the protection side?
It's interesting when you start to look at a provider like Aviva and you start to think, well, what can you do? Because I'm always like that. I think, I don't know if it's the mindset of the world that we work in regards to distribution and sales. It's kind of like, what's next? What's new? There's only so much you can do when you've got a proposition as broad as Aviva's that's, still market leading in many ways. And there's not many more bells and whistles that you want to add on. So it's right what you can do to kind of bring that proposition to life a little bit more. And again, I keep linking it back to kind of making it more of an engaging proposition. So we're doing a lot around how we can showcase the importance of advice. I think Aviva. I think people have a perception of Aviva that we've got very, we're a D2C brand as well as an intermediated brand. Less than 10% of our overall protection written is direct. 90%, just slightly over 90%, is all through advisors on this call today. So it's extremely important for us to make sure that the intermediary market is successful. So one of the key propositions is in continuing to remind clients through our own engagement strategy who their advisor is, how they can engage with them, and that we'll do that through the My Aviva app and website. So when clients have all their documentation, etc. Previously, it didn't have who their advisor was. And hopefully they know anyway, but if there's for one reason they can't remember, it's always on there, and it very much reminds them to engage with your financial advisor should you have any life-changing events, etc. So hopefully that then kind of encourages that more client engagement. That will be a big one. Propositionally, we're looking at kind of added value and well-being. I think how we can continue to make that a really core part of our business. And we've done a lot of feedback and had a lot of feedback, since the AIG acquisition into Aviva around what was good over here, what's good over here, and how do we bring the best of both together. So you'll see more of that throughout this year. How it was last year was a lot of that integration, bringing the two brands together, and that was a big project. Now it's right, okay, we've got all of those foundations. Let's take the best of AIG and bring it into Aviva World. So you'll see more on the wellbeing side. Definitely from like a high net worth side of thing proposition, we'll see more of that coming later in the year. Well, probably Q2 we're going to do that, because again, you said there around the opportunity around mortgages with the budget changes and with the focus on IHT and the need for protection advice. Really, I say high net worth, I'm going to change that. It's high value, because what you think is high net worth is probably the ultra rich, these kind of people that need millions and millions. It's actually not. When you start to look at the impact of the budget and this type of client demographic they'll be hitting, that's probably your middle range clients, 300,000-400,000 pound property, a little bit of invested, a little bit of a pension. They can fall into that IHT tax band very, very easily. So we're calling it high value, and we'll have a whole distribution team ready to which will be under my support, but from a marketing, training, education, there'll be a lot on there, because I think people, like I say, think it's for the ultra wealthy. It's not. It's going to be a lot more. So having a proposition and some training for advisors around how you can get into that space is a key focus for us this year.
You mentioned value. I know AIG's value add was really good, nutrition and stuff. I mean, I do know that certain distributors and brokers have had really good success putting the value add further up the chain. So talking about do you trust your local doctor to give you an appointment? Would you like some some rehabilitation should you get X, Y, and Z? And there's some real success in that. That we do need to bring that value add piece, because people don't like to think about having a heart attack or a stroke, but they like to think about being able to call the doctor at 2:00 in the morning and saying, I've got a bit of a pain, what can I do about it?
That the online GP is probably one of the most popular and most utilised value add service. So we've done all the feedback, as you can imagine, since two brands, and like you say, it just makes it a lot more tangible, because they are using something that they never wanted to use, i.e. a kick policy or a life policy, and you're bringing it to life and something you can use day in, day out. I only used mine recently with my little one who's 5 years old. Never getting a doctor's appointment on the same day. So virtual GP online, done and dusted within an hour. It's so simple. So it's using that feedback, using that kind of feedback from advisors as well, and how we can bring that to life. It'll be interesting to see how that develops more from an advice process perspective, Neil. So working with distributors like yourself, because obviously added value benefit is an added value benefit. The core recommendation from advisors to clients is to cover you in the event of death or a critical illness. Feedback, I think, is just how we can help make it clearer from an advice process guidance around what the recommendation is. Because I think it's going to be more and more of this.
Yeah, I think you could do that quite quickly. So by getting rid of the word value add, doesn't it? It's almost like actually if you take the value add and just say this is the core benefit, then it makes it sound more important in the sales process, doesn't it?
Yeah.
So we've got a good range of products for this year. So just do more of the same with the existing product line. Give more insight. And any particular markets? We talked about high net worth. What about just general markets that you're going to be looking at this year?
So with again, to kind of what's involved in the day to day, you're always looking at from a commercial perspective, areas that you can improve and all that sort of stuff. Which is always a really important one for us. We did a huge amount of work around pricing and underwriting on that last year, which was really strong. And we have some really success in regards to growing not only our market share for IP, but the overall IP sales for 2025, which is great. There'll definitely be a focus for that as well, and just making it more. The key thing for us is making it more accessible for clients to get protection and the protection cover they need. So we always review pricing. We've got a real agile way of having to do that, so we can react quite quickly, which is good. So yeah, I think added value, high net worth, just continuing to review what we've got now, and expanding on areas that we can do, but just making it more accessible and more from a budget perspective, more competitive from a premium point of view.
Because income protection has really grown, hasn't it, in terms of penetration?
Really positive.
It used to be 7%, now it's like almost 20% of cases.
Yeah.
Whether that's the old furlough effect and people just remembering
that mindset.
Or whether it's just protect. I always think there's a strange thing, isn't it? You protect the things you love, and the things you love are sort of your Sky TV and your mobile phone and all those things. You don't really want to protect your mortgage, do you? It's not protect
the dog, and then you don't protect yourselves.
The dog, yes, absolutely.
These are things that you and I spoke about around how we can support personal touch advisors like 10, 11 years ago. It's nothing new, is it? It's just how we can continue to educate, and I do think we need to make things where we can more straightforward and easier for advisors. Look, you've all got a million and one things, whether it's regulation changes, market conditions. From a mortgage perspective, you've got rates, what we can do to make it easier. And I do think, as well as from a pricing perspective, we've kind of streamlined propositions, made the journeys online for advisors easier for IP, etc. That needs to continue, just to make it really seamless, easy process. And I'm probably linking, and I know we're going to talk around underwriting. I'm going to put on a brave face and talk about our underwriting at the moment, which I'm sure people are interested in. But again, linking back to that, the process just needs to be as easy as possible for advisors to give that advice.
Yeah, so I was going to lead into that after a little bit of a tech conversation, because obviously, I understand the one thing for me when doing protections is to understand the sales funnel. So how many inquiries, how many does that turn into conversations?
Yeah, conversions and all of that.
And understanding why those don't happen and addressing each of those bits. And obviously tech has been playing a big part in that. Using AI in underwriting now. I see a lot of talk about that to speed up the process.
Yeah, we'll flip that round. So one of the reasons we were one of the first providers to come to market at the end of November with an AU automated underwriting kind of journey. So what we've done is, it's something we've been working on for around a couple of years, but it was just accelerated and brought to market a lot quicker because of the challenges around our underwriting turnaround times at the moment. And what it's done in a way is, you've got an underwriter there that's got a GPR report that comes through 80 to 85 pages. Again, I didn't know that until I come here, just how, just how large these documents are, and there's so much information on there. Using the AI tool now, it will summarize it to all the key points that the underwriter needs in 3 to 4 pages. So what's gone from an hour and a half looking through and just kind of dissecting all the information and working out, is that relevant or it's not, it's there within 20 minutes. So it's really revolutionized the way that we underwrite. It's only for life at the moment, but we are looking to open it up into critical illness and then IP throughout this year, which will be a massive help. And that will just continue to develop the way that we use AI in our business. We already do in some parts around data analysis, as you can imagine, and how we look at kind of customer trends and pricing. That's been there for years. kind of when I was in a distributor, I'd never understand how much AI was being used already. It was kind of a new buzzword. It's already here, to be fair, in this business, but how we can bring it more to the forefront so advisors and distributors across the market can then feel the benefit. There's a lot more to do, but yeah, the underwriting was the first one, and we had some real positive feedback on it since it went live.
I suppose the most tricky thing is advisor goes through paints the picture, gets the case. It's always a very emotional journey for the customer, goes in and then stalls a little bit. Is there anything any little things that you can give the guys to say this can speed things up, what to look out for?
Yeah, it's an interesting one, because when you look at, I was always in the same mindset. You just want to make sure it can, the quickest route and the easiest route to go through. That's what you want. But then when you come to a provider board, you're ultimately looking at your underwriting is your USPs, where you can then start to make sure you're more competitive, and you can then control not just on pricing, but probably underwriting is more important than a pricing perspective, around how you can then control your risk and make sure that you're getting more business through the door. So it's really important that we have that within our own business, and we've got the control of it. That's the key one. Yeah, I'm sure everyone's aware we haven't got a pre-sales tool yet. That is something that we have been crying out for an awful long time. That will be coming this year. And again, I think for advisors, it's just utilising tools such as pre-sales, etc., around where they can get that information as early as possible, really. So you're managing your own expectations and your clients' expectations, albeit they are all indicative, of course, but pre-sales, you've got some strong ones out there, and ours will be the same, if not stronger, around what the sort of decision will be on certain medical decisions. So I think pre-sales is going to be a key one. I understand the challenge, because you've got a large panel at Primus, which is great because you've got access to providers, but then ultimately you've got to think, who am I going to go to? And it is going to one provider, then the other, and then the other. And in an ultimate dream scenario, you'd have one that's got all providers on and it's all supported, and you've got a bit of an idea of what the underwriting decision will be. I know there's tools out there in the market that do that, but albeit in very different ways, and there's things behind the scenes that not all providers feel comfortable with. So it makes it challenging then to get a consistent approach. So I don't know how that will develop. I think we're quite a way off of having a kind of unified pre-sales underwriting tool across all providers. But I think, yeah, each provider's got their own pre-sales tools, and from memory and what we've explored, they're really, really strong. Yeah. And I think it's just having that understanding. And the good thing about Aviva is, again, one thing I didn't realise is just how strong the distribution footprint is. We have got 40 or almost 50 people on the phone, and they are telephone account managers. They're kind of, your BDMs, but on the phone, so they can work and manage a panel. You've also got our face-to-face BDMs, and you've also got my team. The good thing about Aviva is over 83% of our business is straight through. So that's always one to remember. But that 17%, if something's going to hit from a GPR, it's worth knowing what could trigger that. And that's where you can work with your BDM to understand whether it is, diabetes or whatever it could be. This is going to require a GPR report if you're going for Aviva. So it's just knowing that and having that education, which I know a lot of advisors do. And the frustration part is then when it hits that 17%, we've got a real challenge at the moment with underwriting. I always say too much and get myself into trouble, but I don't think that you shouldn't shy away from it, and we need to be transparent. So we have had challenges probably since Q3, and I'll explain why. So there's a challenge from an intermediary market perspective around underwriters. There's just not enough of them. There's a real lack of underwriters in the market. So where you've got a market where all providers are trying to do new things and new propositions, they want underwriters, experienced underwriters, to be in their business to help write that business and get it on the books. So it's a great time to be an underwriter. It's like being a Premiership footballer. You're getting all these offers, and it's not a bad time to be one of them. So retention's been a challenge, because there's other providers out there that don't. So we are quite unique. We have an underwriting academy, and it takes 5 years for us to bring someone on as a post-grad to then educate them all the way up to be an experienced underwriter, a fully qualified underwriter. I think it's us and Legal in General do that. And I think Vitality might started to do it, because we all know there's a challenge. There's just not enough underwriters. So we got ourselves into a bit of a pickle with that, because we had the AIG acquisition. We brought people over from AIG, strong underwriters. And just with any acquisition and any businesses coming together, retention, as much as you want everyone to work there and everyone to stay, it just happens. So we lost a few people to other providers. So that started the difficulty. then from a pricing perspective, we were really competitive. So we were really strong, and as we have been, and we've got a proposition that's really strong. So you've got that then as well. And then it just kind of snowballed. So we've done a number of initiatives to stop that from happening. So people would have seen our pricing as kind of scaled back because we don't want anyone to have a bad experience. We've been doing a lot around underwriting and how we can make sure our STP rate, our straight through processing rate, is still really strong. So we're still at 83%. And we're doing a lot with recruitment. So recruiting more underwriters. Again, we're taking underwriters from other providers to bring them here. It's not a perfect scenario, but it's what we need to do. And like you say, our academy will help bring more through to the market. And yeah, I think it's just being open and honest and being a bit more open with our SLAs, which we were and we have done, and we shared what our timescales was. So if you have got a client that needs that urgent cover, but they've got a medical condition that you know is going to require a GPR, it's just managing everyone's expectations that it's going to be X amount of days. So it's coming down, the pipeline's coming down now, which is really positive, and the AI tool will only help. So we can see light at the end of the tunnel now. So again, thank you to everyone for your patience. I know it's not been the easiest road, but we will be back into kind of normal SLA territory very soon. I think by the end of Q1, definitely.
A bit of a perfect storm, really, in terms of competitive pricing and not enough people. And
and it's frustrating from a sales perspective because we know we've got a fantastic proposition and we've got some really great reinsurance, everything was there to be, and we did have a really strong year, to be fair, and the market did, but that overlaid. And to be fair, Neil, I think it'll be a problem that we see. It will probably started with Aviva, it could trickle on then to other providers, just because of the reasons I've said. There's just not enough underwriters out there, so it's just to be mindful of that. I think this year it could be a bit of a challenge.
And how are GPs at the moment? Are they returning reports quickly, or is that still a real pain?
That's always a challenge. Yeah. So the frustration you all feel is a frustration we feel as well. But we do have, obviously we had a period where we turned off IGPR reports, so the electric GPR reports, we turned them off. We also decided to turn them back on because we got it all sorted and everything, and we wanted a really successful end of last year, throw that into the mix as well. So you had all these electric reports coming back, which is great because they're quick turnaround. You can get them back from the doctor quickly. Not enough underwriters, really competitive pricing. That didn't help either. But like I say, we've gone through the pipeline there, and it's a much positive position. But the online GPR reports make it a lot easier. We just need to encourage more GPs to utilise that service so we can get it back quicker.
Yeah. Has that affected the claims performance at all? The claims is still fine, Claims
are still fine. Yeah. We've had we'll be doing our claims event, which we'll share the details with you all at Primus in April, I think, and that's always kind of our flagship event, just because of the sheer amount of claims that we pay each year as Aviva, and some really, really powerful stories as well, which really makes it hit home. Just why we do what we do each day. I've never got so emotional working stuff, because we all hear these stories, don't we? And obviously as advisors, you're dealing with it day in, day out if you're having those conversations. But some of the stories here that you hear at Viva, and just, the impact and the positive impact it's made by having the right cover in place and by an advisor that's, gone through that to make sure they have, it's really, really powerful. So yeah, we'll be able to showcase some more of those numbers in April, which will be a great event.
Really good event because you beam it live, don't you, across website and stuff, and
it's getting more advisors involved as well around why did you make sure that client had the cover in place, and it's bringing the advisor into it as well as the client side of the story, which I think is really powerful as well.
So I think the art of storytelling is an important one, isn't it? I remember I learned a lot of my stuff just from understanding things that were happening and what I mean, there's a lovely guy called Robin Carter, I remember him, from Royal London, told this story about his dad dying on a railway station platform and the impact it had on his family. And you sit there and you listen to it, and then you sort of you can really understand. I mean, I think sometimes we talk too negatively, don't we, about what would happen if you die, as opposed to going, what would you like the ideal scenario to be should this happen to you? So you change the
narrative around it.
Yeah, and to say, look, this is what could happen. What would you like to have? Where would you like to be if that did happen? I think that's what they appreciate that, don't they?
And you're right, and it's like what we've always said, it's removing anything around product or kind of techie kind of terms from a protection world, because that's what we understand. But from a consumer and all the research we've done, they don't know, IP and exclusion periods and all that, deferred. It's, what would you want to happen in this scenario? If the worst were to happen, what would you want to happen? How would you want the family, and just making it really relevant.
Yeah.
that's always, that's something we always push through in our sales skills training, is just make it really relevant to the customer and not product, but it's actually, you know, an example of a scenario that they would want to happen. And that's how you bring it to life.
So I think the frustration for me is always we boil it down to a premium, and
Yeah.
then we're always up against the Cavendishes or the online world, whereas actually we should talk about the benefit. You were perfectly right about the complicated nature of. I think someone said to me, according to the insurance industry, there's about 48 ways to die, depending on whether you get a payout or not. And we forget the complicated nature of the products that we're recommending to customers in some ways. Yeah.
Yeah, and the interesting one is around different distributors, because we do work with a vast range of distributors, whether it's direct to consumer, whether it's advised, unadvised, telephony based, face to face, network, so you get a real mix, and that's been interesting as well when you start to look at the market study, and from a regulator looking at our market and thinking, they want to know what's going on. It's been really good as Aviva because we can help them understand that there's a route to market for every type of distributor if that's the right outcome for the customer, and as long as they feel they're getting value and they are getting like you say, the right outcome for their needs. So that's my only nervousness around with that market study is what might happen, from a regulator view, what they might want to do or what changes they may want to bring in, because the last thing you need is any impact in our industry to make it more challenging and more difficult to provide protection advice. Because as we know, customers don't think, you might get a few strange ones, maybe like us, Neil, but where you think, I need to get some life cover or critical illness for the family. It's a product that's sold by advisors, quality advisors in the intermediary space. If anything were to impact that, that's my only nervousness around that, because they are reviewing commercials and commission rates and how different, like say, distributors engage with customers, and is it the right thing? It'll be interesting to see what may come out of that over the next few months.
I think it's interesting because I think from my old days, the average premium for a customer was something around £12. I think that was 12 quid. 12 quid was an average premium, because most people want to just cover a bit of their mortgage.
Yeah.
And sort of 100 grand DTA over 25 years is reasonably cheap these days. So actually, if you then say, well, £11 is, how do you make that commercially viable to sell through with all the risk of complaints and advice and fact find? It's very difficult. Yeah, I mean, the good thing is in this business is that I think the average premium is around about £45 to £50 because people are selling plans.
Yeah,
that shows more of a tailored approach to the protection market, which
I feel the regulator
might have doesn't have a view on.
Yeah, I mean, it's been a real education piece, I think, for the regulator to actually look under the bonnet of our industry, and that's why we've had to spend a lot of time with them, helping them understand and why it is so important that we have got an intermediary market that are remunerated in the right way. Because, like you say, if you can't make it commercially viable for advisors to continue recommending protection, then you're going to see that protection gap get bigger and bigger because it's not a product that's brought, it's sold. So we made it very clear to the regulator that, and I do think they get it. I think they can see the absolute positives of our industry and why it is so important that there are advisors out there doing the job they're doing. I just hope that the impact isn't too, because you start looking at commission caps or all those sort of stuff around commission rates. It will be interesting what they may do on that.
I think the frustrating thing for me is that I've seen some of the analysis they've done and the customer study. They didn't say we've interviewed 1,000 people who've actually claimed on their policy and asked them if it delivers fair value. I think that's a real sort of actually they're the people you should ask about fair value.
They're the ones,
not the people that are just, oh, why didn't you buy it? Oh well, actually, why?
And everyone's value, everyone's view on value is different as well, isn't it? That's the thing as well. You've got an Aviva product, but you can have it recommended via someone on the telephone that's non-advised or someone face to face that it's advised. There's different routes to market. There's different kind of pricing elements, but from that client, as long as they feel they're getting value and they've got a good outcome, then that's good. So that's for the regulator to understand there are differences and nuances in our industry. It can't just be the same for everyone and to operate in the same way, because that's just not the way that our market works. I just saw a question pop up then around Aviva's view. I think our view is that I don't think they'll do anything dramatic, but let's face it, it's been a huge distraction for us, Neil, isn't it? I mean, the amount of, I think it was 21 million lines of data that we had to send back to the regulator for everything they wanted to see from the Viva book of business, as well as a very detailed response. So I know the distributor response was slightly differently, but ours was, I won't even talk about how many pages around, what's going on in the market, what's what's the Viva's view, etc. They've done that across all providers and they've done that across all distributors, and it's taken up an awful lot of time and have been a real big distraction. My thoughts is that they won't come out and go, oh, thank you for those millions and millions of light of data, everything's great, carry on, we're really comfortable. They will have to show that they've done a review and they've done an analysis and this is their recommendations for change. But again, we don't know what that is. If I had a crystal ball, I think I'd be quite popular. But my view is I don't think it'll be too dramatic, because their responses in the interim has been, we know that this market is working and we know the reason for advisors is absolutely key to ensure clients getting protected. I think they just want to make sure that they're reviewing remuneration models and commercial models to ensure there's no outliers, and there's a bit more governance around it, which I think we all do anyway. So the ones that are doing it correctly, like Primus and do the panel reviews and what we do in regards to making sure everyone is in a, you haven't got some, outliers, I think we'll be fine. I think it might just be some others out there that may need to be brought in line slightly. Is that done via a commission cap potentially? Or they start to look at commission rates. But then again, like I say, there's so many different variations across the market. It'll be quite difficult to get consistency. And then you take out the competitive edge of distributors because everyone's the same. So, my answer is no. I don't think we've got a view.
Long story short, you haven't got a clue what they're going to come
out. I have no clue.
Yeah, no clue. But apparently, I mean, there is a lot of talk about loaded premiums, which we know. Loaded premiums is a bit of an analogy.
Yeah.
You have to justify what you're doing with the extra commission. Does the customer get a better outcome because they've got this higher commission rate to play? And I think that's difficult for anyone in our industry to be able to talk about, because I don't think there's a broker in our space at the moment that would say they're doing a bad job for the customer.
Absolutely.
So it's quite an interesting.
The justification's the right word. That's what I think that there'll be a justification. And that's the reason why you work with a network, like Primus or whoever, because you will do all this governance and all this rationale and the justification around why the rate you get is the right rate you get because of everything that you deliver in regards to advice process, etc. So I think that's where advisors can feel comforted that you will do a lot of that heavy lifting. But yeah, the justification, that's all. And I do think that will be relevant for anyone receiving commission, loaded or not. Like you say, we're in a world that what does that actually mean anyway? But any commission rate that's being paid, you'll have to justify it.
Yeah. But what's interesting from hopefully they picked up, what was interesting from their consumer research was that I think it was 48% of people don't have some form of protection in place, because you've got people that have got company schemes and the like. So when
company schemes.
So it's 48%. And I think I looked at the numbers, and roughly 3/4 of that 40, so about 40% of customers could have had some insurance if they'd just spoken to an advisor, because all the things they put down as objections to not getting it, didn't know what the products did, didn't know where to find them, didn't can be addressed by just talking to a professional about them. So I think there is that you feel that the protection gap is not necessarily consumer driven. It's more it's almost going back to the good old days of having. I mean, when I first had my first mortgage, if people tell I'm old, I used to get tax relief and my insurance company wanted the bank wanted to charge over my life insurance policy to cover it. So there were drivers to bring the you can't have this mortgage unless you've got some protection to cover it. We need to get back to a model, don't we, where people understand that we can't do product bundling, but things are linked. If you have this, you want this.
Yeah. And that's the advisor. That's where the USP of an advisor really comes in. If you're working with an advisor for mortgage advice, and you can link in protection and GI and do the whole piece. But I agree. Yeah, as an industry, we need to be a bit more joined up on this. And whether that's something that may come from a regulation view or, working with trade bodies. I know we work with Amy like you guys do around that kind of consistent view of lenders, protection, and how we can bring it all together a little bit more, just to help the conversations, if anything, for advisors. You would like to think more of that.
Yeah, I was at do the other day when someone just said a simple idea. Said at the bottom of all the mortgage illustrations, you've got your home will be repossessed if you do not keep up the repayments, and then so just need to add an extra line in there that goes, but we have a range of plans to prevent this from happening.
Yeah,
and that was just like an extra line on a mandatory readout statement to
yeah,
everybody, that meant the conversation had to happen, because you have to read out fairly, you have to highlight that statement in
you have
a
to.
conversation.
Yeah.
Yeah, yeah. Just conscious of time, and just a couple more things. Global treatment, how's that going? I always say to people when they when I do a little broker workshop, I say, what do people remember about different brands?
Yeah.
And when we
Yeah.
think about Aviva, we always think about global treatment. Is that still something that's high
Uh,
on the agenda?
yeah. As you can imagine, with the the review of what's added value benefit, what's important. Intermediary advisor feedback was absolutely like global treatment is up there as a key part and a real USP that they then include in their advice conversations when recommending Aviva. So yeah, absolutely part of the keeping a core part of the proposition, always reviewing it, always looking at how we can make it more relevant. I think sometimes we because it's just in of such a core part of Aviva's proposition, we can forget to kind of sing and shout about it sometimes. So I think we just need to bring it back to life a little bit more and keep reminding advisors of why we do have that as part of the proposition and the benefits. Because yeah, it's you can see peaks and troughs of where it's been utilised and recommended, but it's still a huge part of most of the recommendations for Aviva have global
Yeah.
treatment added on.
I always feel like going on to, every time I see a GoFundMe page pop up on my
Yeah.
Facebook link, it's like going, oh, send Johnny or Jane over to the States to get this treatment. We need 20,000 for it. I'm
Yeah,
thinking, oh, £5 a month. Was it £9? I can't remember what the figure is now.
it's I don't know.
Don't know. For a small contribution per month, you get all this value,
Yeah,
this benefit should the worst happen. I think
absolutely.
I do feel like emailing everyone on the GoFundMe site going, if this could happen to you, you
Yeah,
should get some cover yourself just to avoid it.
yeah, absolutely.
And I suppose the last question, one word of advice, if you were to give anybody on the call, in terms of addressing some of the protection needs of customers, what would that be?
I probably think it's the point around that, how strong is your client engagement strategy and how regularly you're contacting your clients. And it's like you said, it's moving away from that transactional piece. It's becoming people think, you're going to wait for a fixed term, rate to finish and then you'll get in contact again and protection kind of follows on the back of that. No, just make sure you're working with you guys at Primus and providers because we've got that much collateral, just whether it is insight into what's happening in the industry or the market or NHS or whatever, just that regular engagement, whether it's a newsletter or whatever. That is the one piece of advice I think if I now understood that previously and working with across distributors, that's the one theme that keeps running through, and I think that's so important, especially with the world where you've got so much coming digitally and they're getting more and more exposure to you know other ways to access certain products, whether it's mortgages, protection, GI. You need to make sure that you are there at the front of their mind and they know who you are.
Absolutely good. Well, I remember sitting on a workshop and we went through the paperwork that a customer gets through the process. They get a copy of their fact find, copy of this, copy of that, and then they get their policy documents, and then they put this. I think a firm said, "Well, we have a process. So we do this. We call them there to explain this. We call them again.
Yeah,
Once the case has gone live, they do a monthly call, then they do a quarterly call, and then they do an annual call when the annual policy when the annual statement comes
yeah.
out, just to make sure that people understand what they've got. And it's wonderful how many additional leads, referrals, opportunities you get because you're not just selling a bit of paper.
Yeah,
I mean,
absolutely.
if you take a an average premium, what, 45 quid or so, 45 quid on 12 times, you're actually selling them practically a small car, because they'll probably pay somewhere about 8-10 grand's worth of
Over the
premiums
term.
over
Yeah,
time. You're actually
yeah.
selling them a car in some ways. It's not a cheap product, it's a 20 grand product because of the commitment over the term of the policy.
Over the term. Yeah.
So keep reminding them what they bought and why they bought it, and if there are any changes coming through that benefit to them.
Yeah, yeah, agree.
Agree. Cool. I can't see any questions. I'm looking at no. Can you see questions on here? Chat. We only had 2 in the chat box, which was
Oh yeah,
we've covered off
underwriting.
underwriting times and
Yes, Andrew. Yeah, we're on it. So we're
yeah,
we're going to get some updated view. I think we're under. I think it's around 38 days still. Our kind of longest case is around 30, but everything kind of from a normal process is catching up at the moment.
Yeah, and we've covered off the protection review. So
Yeah, I still haven't
we'll
got
look
a
forward
clue.
to seeing what that delivers, when it delivers, if it delivers. It's always interesting.
Yes.
These things get delayed and delayed, but
Oh, I know, I know.
can I just say thank you so much for your time today? I appreciate the
Oh,
trains were a
it's
little
like a
bit
therapy session
difficult.
that was. I feel
Was it
very,
like
very, yeah.
you felt
Like a weight's
relieved? You
been
felt
lifted. Same
very
time next
good.
month.
Absolutely, we can be anytime you want. Next time we'll find out what the price of
Yeah, I'll book you all in.
yeah, we can find out what the price of global treatment is as well, can't we? Next time.
I
So
will. I'll add
yeah,
it to my list of things I need to find out about Aviva.
brilliant. Thank you, Charlotte. Appreciate it. Thanks, guys. I hope you have all have a good week, and we'll catch up with you next Monday when we'll bring. I think we're doing Zurich. Zurich's we're going to have a chat with Adja Zurich about what they're doing in their space. So,
Oh,
Charlotte,
got the
brilliant. Thank you
memories.
ever so much. Yeah,
Thanks
brilliant.
all. It's great to
Thank you,
see you.
guys.
Thanks,
Thank
Neil.
you. Bye bye. Bye
Bye.
bye.
Bye.